Scarlett, today I am delighted to introduce Steve Pagliuca, Managing Director of Bain Capital. Steve, David was just saying there's no need to take a position. I don't think, frankly, that it's quite right for private equity to punt on this one. I want to ask you, do you want to see the proposals that the president has put forward passed?
Well, yes and no. I think it is appropriate as an American to take a position, forget about private equity, because we've got to get the banking system right. We talked last year about the first step of this turnaround was stabilizing the banking system. We're almost there, and now we've got to strengthen the regulations so it doesn't happen again. So we've got the number one thing is capital adequacy, and these proposals address that. The question is, do they go too far in terms of trying to de-risk the banks and make them smaller? The American banks may become uncompetitive in that situation, and it'll also add a lot of uncertainty to bank management, which may constrict loans. So we should be worried about it.
An excellent question, and you are intimately familiar with the political equation here because you just competed for the Democratic nomination for the Senate race up in Massachusetts. Let's talk about populism for a moment and how it might affect your industry. If the president is ready to tax big banks, if the UK is ready to tax bank bonuses, how much longer from now, or how long is it going to take before we say a tax raid, let's call it, on private equity, on hedge funds?
Well, again, I think the country has to look at its whole tax policy. We obviously have a $1.3 trillion deficit. It took us 200 years to build up a national debt of $1 trillion, and now we're burning through $1 trillion a year. So we've got to look at tax policy. But the only way to get out of the deficit is to build jobs. The president focused on that, and we're in private equity venture capital at Bain Capital, and we're building companies to build jobs. So that's what we've got to do. We've got to invest in jobs. I think he used the word entrepreneurship and the middle class, 6 or 7 times in the speech.
Well, there's no question you're investing in companies, you're investing in jobs, but at the end of the day, you have to make money. When you look around at the markets right now, what seems more attractive as an exit strategy, IPOs or mergers and acquisitions?
My answer, it's situational, and it's both. It depends on what company you're in. The IPO market is starting to happen now. We've got a little more stability in 2010 than in 2009, 2008. I think 10 will still be a cautious year, but I think you'll see IPOs. The full stimulus hasn't even kicked in. That's going to continue to kick in the first half of 10, and you see some fundamental demand coming back, and the BRIC countries are doing well.
Will the IPO window close, though, if we see market volatility persist?
There is a chance that we'll close because people like stability, and that's why I would urge the president to get through this plan and make this plan so the banks are de-risked, but we don't throw the baby out with the bathwater because we've got to have strong global banks in America.
Quickly, Steve, are we going to see Bain as an active buyer this year?
Bain looks at every deal on its own. We've overlaid the economy to it. We look at the deal one by one, and we do see some attractive opportunities. We've already made an investment in India. India is growing. We've made an investment in Japan, and we're starting to see some U.S. opportunities come available. When you have capital in a capital-constrained market, it's valuable.
Well, we wish you luck, and please keep those new jobs coming.
Well, it's great to be here.
Steve Pagliuca, Managing Director of Bain Capital, right here at the World Economic Forum in Davos, Switzerland.